Myself, Dr. B. Shanti, Assistant Professor and Head, Department of Cooperation, Vellalar College for Women. I would like to discuss about the topics, basic concepts of banking, major problems of banks such as overdues, non-performing asset, and recovery management practices of both commercial and cooperative banks. What is bank? An institution which transacts banking business is called as a bank. Also, bank is an intermediary financial institution which deals with deposit, loans and advances and other money-related services. What is cooperative bank? A cooperative bank is a financial entity which undertakes banking business on the basis of cooperative principles and it belongs to its members who are the owners and the customers of the bank. Definition of banking. According to Banking Regulations Act 1949, banking means accepting for the purpose of lending or investment of deposits of money from the public, repayable on demand or otherwise, and withdrawal by check, draft, order, or otherwise. What is cooperative banking? Defined a cooperative bank as a mutual society formed, composed, and governed by working people themselves for encouraging regular savings and granting small loans on easy terms of interest and repayment. Features of banking. The banks are dealing in money. Customer deposits must be withdrawable. Banks are dealing with credit. Its functions are commercial in nature. The banks are also acting as an agent and undertaking some agency functions for the interest of the customers. Functions of bank. Banks in India offer a wide range of banking services for its customers. There are two types of functions of bank. One is primary function and another one is secondary functions. The primary functions include accepting deposits and lending loans and advances. Secondary functions include transfer of funds, issue of notes, issue of demand drafts, credit deposits, foreign exchange services, collection of checks drawn on other banks, accepting and collecting of bill of exchange, safe deposit facilities, and at present, bank offers all internet-related functions like NEFT, RTGS, mobile banking, SMS services, etc. Importance of banking. The banking industry handles finances in a country, including cash and credit. Banks are institutional bodies that accept deposits and grant credit to entities and play a major role in maintaining the economic status of a country. Given their importance in the economy, banks are kept under strict regulation in most countries. In India, the Reserve Bank of India is the apex banking institution that regulates the monetary policy in the country. Types of banks in India. Banks in India are broadly classified into two types. One is scheduled banks and another one is non-scheduled banks. The commercial banks and cooperative banks can be both scheduled and non-scheduled banks. The commercial banks are further classified into public sector banks, private sector banks, foreign banks, and regional rural banks. They accept deposits and offer loans and other banking products. Other than this, payment banks, which strictly offer deposit facilities, small finance banks, and specialized banks are also present in India and cater to the banking needs of small enterprises or marginalized farmers and laborers. Problems of banking sector. The banks are dealing in money and also money related services facing lot of problems. The problems of banks are large overdues, non-performing asset, losses in rural branches, advance to priority sector, competition from non-banking financial institutions, competition with foreign banks, virtual payments, cyber security, virtual customer service, political pressures, etc. Among all the above problems, overdues and non-performing assets are considered as major problems of banks. Now we discuss about overdues in banks. Overdue. A loan amount which is not settled on the due date, the amount pending recovery is known as overdue. Causes of overdues: misutilization of loans, infructuous investment, it means valueless investment, separation of lands, sale of assets, lack of marketing facilities, inadequate production credit, uneconomic holdings. Banks provide credit to defaulters. To rectify these problems, recovery management practices are to be followed. It will be discussed finally. Then, non-performing asset. Banks should not treat an advance as non-performing asset merely due to existence of some deficiencies which are of temporary in nature, such as non-availability of adequate drawing power, balance outstanding exceeding the limit, non-submission of stock statements, and the non-renewal of the limit on the due date, etc. Where there is a threat of loss or the recoverability of the advances is in doubt, the asset should be treated as non-performing asset. According to the RBI rules, if payment is not made and accounts are not regularized within 90 days of the date of default, the borrower's account is classified as non-performing asset. Non-performing asset meaning a non-performing asset refers to that loan amount and interest remains overdue more than the specific period after the due date. Definition of non-performing asset. Non-performing asset is an asset which does not generate any income or revenue over a long period. Causes for non-performing asset in banks: poor loan policy, improper credit appraisal, business failures, sluggish legal system, debt waiver policy, poor monitoring system, etc. If NPA increases, the interest margin are highly affected and the asset considers a non-performing asset and it will be stop generating income. As a result, the interest earned normally by the bank will diminish, but the banks are still obliged to pay the interest on deposit. Asset classification. The banks are classifying their asset into two categories, namely performing asset and non-performing asset. The performing asset. Only the standard assets are called as performing asset. Non-performing asset. Non-performing assets are broadly classified into three categories such as substandard asset, doubtful asset, and loss assets. Performing asset. Already we have seen only the standard assets are coming under the category of performing asset. What is standard asset? The standard assets are those assets which have remained NPA for a period of 12 months or less than 12 months and the risk of asset are normal. Depending upon the nature of the institution, provision of 0.25% to 1% is made. Non-performing asset. Here the first category of non-performing asset is substandard asset and it is explained as follows. For a period of more than 12 months, NPA are classified under substandard asset. Such kind of advances possesses more than normal risk and the credit worthiness of the borrower is quite weak. General provision of 10% on total outstanding should be made. The second classification of non-performing asset is doubtful asset. For a period which is exceeding 18 months, non-performing asset come under the category of doubtful asset. Doubtful asset itself means that the bank is highly doubtful of the recovery of its advances. The collection or recovery of such kind of advances is highly impossible. The recovery is doubtful up to 1 year 20%, 1 to 3 years 30%, and more than 3 years 100% provision should be made. Next category of non-performing asset is loss asset. A loss asset is one where loss has been identified either by the bank itself or an external or internal auditor or by cooperative department or by the Reserve Bank of India that the recovery of loan amount is not possible. It should be fully written off. If loss assets are permitted to remain in the books for any reason, 100% provision should be made. Recovery management. Any bank, commercial or cooperative, private or public, have to adopt certain recovery management practices for reducing overdues and non-performing assets because performance of a bank or any credit institution can be judged not merely from the quantum of credit disbursed but also from recoveries of loan affected. Loan recovery depends on quality of loans disbursed, supervision over utilization of loan, and collection of dues. It can be made possible by the field officers only. A high level of recovery performance is judging the operational result and efficiency of a credit institution. Unless the loans are recovered after the due date, the bank or credit institution or the society cannot issue further loans. Ultimately, production, profit, and volume of business will be affected. Board of Management and officers become responsible to recover such overdues. Factors considered for better recovery of loan: quality of lending, effective supervision, providing marketing and processing facilities. Farmers market their products through marketing cooperatives, regulated market, government agencies. Conversion of short-term loan into medium-term loan or sanctioned fresh crop loan. Member education program. Reminders to be Reminders to the members, non-official leaders involved in collection of overdue, strong action against willful defaulters. The bank should adopt above said factors for the regular recovery of loan amount for the sustainable development of banks. Thank you.